So to look at the cost of those drugs, what's your copayment? What's your deductible?
Hey everybody, welcome back. This is Retirement Fundamentals. I am your co-host Kylee Mollotte, joined with Ryan Anderson. And welcome back. Last week we talked about original Medicare Part A and Part B. Today we are going to dive deep into Part C and Medicare supplements or Medigap policies. What do those mean? How do they affect me? These are the part of the how to fill in the gaps when it comes to Medicare, right? We went over Part A and B and there were a lot of liabilities. So how do we fill in those gaps? How do we eliminate those liabilities best we can to put our best foot forward to protect us the most when it comes to retirement? Like we said earlier in the podcast, we are asset protectors, and that's from your health to your wealth. So we want to make sure that you're not writing your life savings away to medical bills. And so we're going to give you some tidbits on how to protect yourself and to protect your money within retirement. So Ryan, let's get into it. Let's go over Part C first.
Okay, so, well, before we do that, let me go ahead and do a quick recap of what we talked about last week. And that is Medicare Part A and B. So, Medicare Part A, there's no cost to that as a premium wise. There are some costs to use that covers your hospital room and board. Medicare Part B, there is a monthly cost to that. And at the recording of this podcast in July of 2024, we've got that it currently is $174.70 a month. That changes every year, or it could change every year. So if it's not currently right now when you're watching this, go ahead and check to see what those numbers are.
Yep.
And Medicare Part B covers 80% of your skilled labor, doctors, nurses, labs, and x-rays. But that other 20% is what we need to worry about. And there is no limit to the liability on that 20%. It doesn't increase to a certain limit and just get cut off. There's a line there. It's unlimited. So if you have a major medical or major health event that's going to cost millions of dollars, you could rack up hundreds of thousands of dollars with this. And I say that that's a real thing, and that we've got things that happen to family members, to friends that we're not expecting. I mean, how many of you know somebody who's gotten cancer? Were they expecting that? How many of you have had a family member that's died suddenly? Were they expecting that? No. So we need to plan for those things. So Medicare Part C is one way that you can go ahead and cover that 20%. It is called a Medicare Advantage plan, and these are the plans that you see advertised on TV every year. And they've got different celebrities that come on and say you've got benefits that you're eligible for. You're missing the opportunity for free dental, for free whatever it is. The commercials, and I can't say the sports figures backslash 70 stars backslash whoever that are, you need more. You've all seen, you know who
Yeah.
I'm talking about.
Yeah,
And
we know.
and so these plans are put on and are sponsored and managed by private insurance companies. And there's lots of them out there. All of them have to be approved by Medicare to be an officially sponsored Medicare Advantage plan, Medicare Part C. And they've got one requirement, pretty much just one basic requirement, and that is that they have to be at least as good as Medicare Part A and B together, and they have to have some limits to some of the expenses to them. That's pretty much it. And what happens is when you get one of these plans, Medicare A and B go dormant. They just kind of disappear into the background, and Medicare Part C becomes your coverage. Now, the thing about it is that a lot of these plans are very affordable. I mean, I'm talking $0 premiums. And they've got other ones that are more expensive, the same time. I mean, $150, $200 a month. And they're based upon the geographic area that you live. So if you live in a metropolitan area, major city, you're going to have a lot of options. If you were in a rural county someplace out in the middle of, Timbuktu, you may not have any available to you at all. So that is something to be aware of. And insurance companies that manage these and put these on, they will actually send Medicare, the federal government, that they take care of and that they replace Medicare A and B. And they send and they take the liability for that. And the federal government pays them a significant amount each month. The numbers that I've seen are somewhere between $700 and $1,100 a month per person that the federal government is paying these insurance companies to be your Medicare Part C provider, which is why they can offer a $0 premium. Does that make sense?
Absolutely. And Pay attention to your network. These plans are very finicky. These are the plans that are changing every single year. These are the plans that you have to keep an eye out for. So, for example, a lot of the plans bundle. They're a bundle. So they bundle your health and your prescription drug plan. Those are formularies that change yearly. That's why AEP is so crazy, right? Annual enrollment period. That's October 15th through December 7th. That's when your mailbox is full. That's when people are calling you off the hook. And that's when you're seeing every Medicare advertisement that you can possibly watch when you're watching any sort of TV. So they are bombarding you because it's your only time during the year to change. So it's an important time to have that annual review. There's been so many times where I've been in a client's home and they're like, nope, Kylee, we're great. We're going to stay on this plan. I don't even want to get into it. And it's like, well, that's my job, right? That's why I'm here, is to help you get into it. And I have been a part of so many different cases where they weren't changing, but their plan sure changed, and it affected their pocketbook in a big way. So that is something to be aware of. They are, I don't want to say volatile, because the plans themselves can be really great and robust, but they are volatile in the fact that they change without telling you exactly what's going on. So it's your job to really dive in deep. When I say you don't know what's going on, maybe your doctor is no longer a network. How big of a deal is that?
Yeah.
You've had the same doctor for 30 years, and then all of a sudden they've changed networks or they've changed providers. And they're no longer in your network, and you want to go see them in February and you can't. So something to keep in mind.
You know, it's crazy that when I go through and I'm sitting down with a couple or an individual, and we are time forced to review their Medicare Advantage plans, or we're going to be putting them on it, there are 5 things that I strongly recommend you look at. Number one, what is the monthly cost for that plan? How much does it cost you? What's the premium? Sometimes it's $0, sometimes it's more than that. And as a general rule, that premium will come out of your Social Security check. If you're not collecting Social Security, you're going to have to write a check and pay it. So, number one is the premium. Number two, what is the cost to use the plan? So, if you've got a deductible or a co-payment or something along those lines, to see a primary care physician on one plan might be $0. On another plan, it might be $50. And so, or to see a specialist might be $20 or $100. And if you're seeing 3 and 4 specialists a month, you might have a $0 premium, but you're paying $300 or $400 to see a specialist. That may not be the most ideal plan. So, so number one, again, your monthly cost. Number two, the cost to use the plan. Number three, you swerved into the network. That you've got HMOs, you've got PPOs. Remember, HMO. That this is where you've got basically a closed network. So if you go outside of the network, you have no coverage. A PPO, a preferred provider organization. This has got a network, but you can go outside the network and you still have coverage, just have a higher copayment or a higher deductible. So making sure that your doctor or the clinic or the hospital, the one that you prefer, is still in the network year over year is a big deal. There are several examples that I've seen over the last 10 years where they have had providers, hospitals, and entire networks leave the specific plan during AEP. In fact, this last year, we had a case where a major provider dropped a hospital organization mid-year. I mean, all of a sudden, people were scrambling.
That happened in my state.
Yeah, it was up in Washington.
That happened in my state.
And then the fourth area that we want to look at is prescription drug cost. As Kylee said, that a lot of times the drugs are rolled into it. So it's a plan. You've got your healthcare and your prescriptions in one place, which is handy, but it's also can be problematic, especially if you're on some specialty drugs, maybe some more expensive drugs. So all of a sudden that I'm going to be changing networks, and the plan where my drugs are affordable, my doctor's no longer on it. It can happen. So to look at the cost of those drugs, what's your copayment? What's your deductible? How are the drugs tiered? Most drugs have got tiers 1, 2, 3, 4, 5. When one plan 1 year, a drug might be a tier 2. The same plan the next year, it could be a tier 3. They change. Yep. And then the last one, number 5, is the extras. The no cost goods, the freebies, the kind of things, the over the counter essentials for some plans. Maybe they'll cover your dental. Maybe they'll give you some money for groceries. Maybe they'll give you rides to and from the doctor's office. Call a nurse's hotline, whatever those are. The gym membership, those are a big one. And as you're looking at those,
Yeah.
people say, "Oh, I look at all these things we get. That's wonderful. But let's take a look at it and let's be honest with ourselves. Am I going to use them?" So pick the
Right.
plan that has the extras that you go to use. I mean, how often have you seen, "Oh, I'm going to have a gym membership. Great. I'm never going to go. I've got a gym membership. I've had one for
Yeah.
years. Does it look like I
Yeah.
go to the gym?" I mean,
Well, and I would also like just warn my clients because they'll be like, "Oh, I have dental," and I was like, "Okay, yes, you do, but I want you to hear the word some. You have some dental, some vision, some hearing." What they want to do is they want you to go to your annual exams. Are they going to help you with with veneers? No, they are not. Are they going to help you with LASIK surgery? No, they are not. Are they going to give you ear implants so you can hear better? No, they are not, right? So every company does things a little bit differently. And so one year a company is going to kick it out of the park with dental, right? They're going to give you a nice dental stipend that you can use to get your cavities filled. But just because you are on this plan, I just don't want people to think, "Oh no, I'm covered with dental," and then they go into the dentist office
yeah,
and they still owe money,
yeah,
right? So I like to be upfront. If I know it's going to be $1,000, I want to know before the appointment, not after, right? It's a lot harder pill to swallow when you get a bill of way more than you were expecting. So that's just something to keep in mind with those extras. Yes, are they great? Yes, absolutely, they can be. But let's be realistic. They're not the end all be all, and these plans aren't going to make you, lose 50 pounds and be able to do a backflip. So just
yeah.
something to
The
be
thing
aware of.
about it is that as we go through and look at them, that one of the things about it is that these plans are really good and they serve a purpose. And some of them are available only to individuals that are on a lower income. It's called the dual special needs plan. Or there's other plans that if you've got a even slightly higher income than that, you might be on what's called a low income subsidy, and they can help cover your prescription drug costs. These are state and federal plans that work really well with this type of a
Yep.
coverage. So the idea here is that the insurance companies are wonderful. There's some of them out there that are actually work specifically with people that have got retired military benefits, as far as TRICARE for life and stuff, and they have plans that are coupled to work with that. So they, depending on what your situation is, there's a lot of opportunities out there. The other part to that is, like we said, some of them have prescription drug plans, some of them don't. Some of them have got HMOs, the Health Maintenance Organization, the closed network. Others have got PPOs, the Preferred Provider Organization. Some of them even got hybrids in addition to that. So trying to figure out the one that works best
Yeah.
for you is a big deal.
Yeah, and you can go and you can look for yourself too. Medicare.gov. They have everything on there, all of the plans. What you have to do is put your prescription in and put your zip code in. Then you will see what plans are provided to you. I worked in a rural community before, and they had 3 plans available. Rather, when you go into town, into the city where the population is bigger, they had 28 plans. So when you're calling your sister or you're calling your daughter and you're like, "Oh, I'm on this XOXO plan," and they're like, "Oh, me too." They can be very different. So just make sure that you're not just signing up because your friend told you to sign up for that plan. You need to look at where you are, and if your doctors are in network, if your prescription drugs are going to be covered, if the plan is even available in your zip code. They are not all created equal. You will have one company and they will have 4 different plans. So you need to pay close attention. I would recommend going onto our website, retirementfundamentals.org, chatting with us, getting us we can get you a representative. We can get you an agent to look at your specific situation, look at your area, and answer those questions, because it can get confusing and we want to keep you out of the madhouse, I guess you could call it.
We've not even touched on Medicare supplements or the Medigap policies, which are basically the same thing. They are exactly the same thing, actually. So sorry if
Yep.
we at the beginning of this when we said we're going to cover med subs and all those things, that will have to be the next episode. We want to try to keep these things nice, tight, and fast so you guys can get in, get out, and get the information. But as always, if you've got questions, please send us a note, send us an email. We love to answer your questions online. And if we answer it, we'll mention it by name. It's a big thing.
Thank you for joining us. Stay tuned for next week. We are going to dive deep into Medigap policies or Medicare supplements, 2 words, 1 meeting, and we'll get you covered what you need to know.